Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings. Today we're looking at a Form 8K from Protagenic Therapeutics, and trust me, it's not as therapeutic as it sounds, especially if you're a shareholder who hates reverse stock splits. This report is basically a snapshot of a special meeting they held in April of 2025 where some big decisions were voted on. It's like the company's version of a town hall meeting, but with legally binding results. The main event, a potential reverse stock split. So what exactly happened at this special meeting? Well, two key proposals were put to a vote. Let's break them down. First, there was a vote on whether to give the board of directors the power to do a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares, which increases the price of each share. Imagine having 10 slices of pizza and then deciding to cut each slice in half, leaving you with only 5 bigger slices. The total amount of pizza is the same, but there are fewer slices. In this case, the company wanted the option to do this at a ratio between 1 for 10 and 1 for 20. This means that for every 10 or 20 shares you own, you might end up with just one. The goal is usually to boost the stock price, often to meet the minimum requirements for listing on an exchange like Nasdaq. The vote passed with about 3.5 million votes in favor, roughly 333,000 against, and about 155,000 abstaining. Seems like the company now has the green light to proceed with the reverse stock split if they think it's necessary. Nobody abstained because of broker non-votes. The second proposal was about whether to adjourn, meaning to postpone the special meeting if they didn't have enough votes to approve the reverse stock split proposal in the first place. Basically, this was a backup plan to buy more time to convince shareholders if the initial vote was too close. Again, this proposal also passed with around 3.5 million votes in favor, 336,000 against, and 161,000 abstaining, with no broker non-votes. So they had the option to delay and try again if needed, but it seems the first vote was convincing enough. Queries to April 18, 2025 scroll. Okay, so what's the big picture here? Protagenic Therapeutics now has the power to enact a reverse stock split sometime before the end of January of 2026, if they believe it is required. Whether they use it or not remains to be seen. Now, let's step back and look at what this might mean. Reverse stock splits are often seen as a sign that a company is struggling. It's like putting lipstick on a pig. It can temporarily make the stock look more attractive to investors, but it doesn't change the underlying problems of the company. In this case, Protagenic Therapeutics may be trying to avoid being delisted from Nasdaq, or to attract institutional investors who have minimum share price requirements. However, there's always a risk that the reverse stock split won't work as planned. If the company's fundamentals, meaning the basic financial health, don't improve, the stock price could fall again, leaving investors with fewer shares that are still worth less. It's like shrinking the pizza slices, but the pizza still tastes bad. Also, it's worth noting that there were a significant number of votes against both proposals. This suggests that a portion of shareholders have concerns about the company's direction. It's a sign that management needs to address these concerns to maintain investor confidence. In conclusion, Protagenic Therapeutics has given itself the option to do a reverse stock split, which is a tool that can be used to boost the stock price but doesn't fix fundamental problems. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. And let me know in the comments what company you'd like me to decode next.